So there's the big picture, folks. We have Alex Coffey, host of Next Gen Investing, with me this morning. A busy week it has been, but it is not over because I know there's a lot on the docket even for today. But I will start with Nvidia, and now working on a new chip that they can sell to China.
Yeah, good morning, Nicole. That does appear to be the news. Some sort of a downgraded version of this H20 A.I chip for China is planned to be released sometime in the next couple months. This is following U.S. export restrictions on the original model. This is, of course, a Reuters report that cites some familiar with the matter. They notified major Chinese customers as well, including leading cloud computing providers, and they aim to release this modified chip sometime in July. Now, on the surface, while that reads as a pretty good story, Nvidia shares are little changed on this news, up, let's call it, 50 cents or so, or at least that's indications in the pre-market. So despite the optimism that you talked about maybe in that overall market, and this story not doing much to really get Nvidia moving to the upside here today.
All right, so, it's interesting, it's not getting much of a move, but I'm really happy to hear this because I was concerned when I started to hear Huawei sort of filling in the holes, and, I guess Trump or people knew Nvidia could change it up and fix it and do it in a way to meet the regulations and get it done. And look, Nvidia at 117, not below 100 where it had been, so it's making a nice comeback.
Yeah, I think it's also just economic reality in some cases, and sometimes you got to look at things through some sort of realpolitik lens. Like, it wasn't as if China was never going to get these chips. They would probably just go through intermediaries. It creates sort of a secondary market for these types of things. And so when you look at it, it's similar to export controls on countries like Russia with oil. Didn't stop Russian oil from hitting the market. It just created intermediary countries to kind of serve as the player in those the different trades. So I look at it as it's probably something that Nvidia was going to have the impact, but for many ways China would have found ways to get this technology, whether that was through companies like Huawei or buying it through other countries that Nvidia could sell to. That said, about $17 billion in revenue is where Nvidia in China sit. And that's about 13% of Nvidia's total sales. So if they're able to, connect directly using this more downgraded chip, perhaps that limits the impact of some of that when it comes to the total revenue that Nvidia gets from China, which again, 17 billion or so for last year. That's about 13% of total sales.
Okay, next up. Should we get to Expedia? What happened, right? I mean, the story that we've been hearing, and that is a little bit of waning of demand. That's definitely something they're speaking about, right?
Yeah, exactly right. The stock under pressure today. A pretty sizable drawdown is indicated in the pre-market. Numbers for the quarter reported were okay. They weren't, necessarily good or bad. A beat on the bottom line, 40 cents versus 29 cents that was estimated. And then basically in line on revenue. It comes in just below $3 billion. The estimate was for just over $3 billion. So you could call it a small miss on that. When you look at some of the things that were discussed, meaningfully above guidance in terms of the numbers that they brought. But if you look at analyst responses, Piper Sandler, for example, downgrading Expedia to underweight from neutral. Price targets way down at 135, which before they were at 174, so kind of completely changing their tune on this particular name. They talked about it being mixed with bookings and revenue missing expectations, just slightly, that 1% or so miss that we talked about, but it being offset by the better EBITDA in terms of the bottom line metrics. And they said that the commentary around inbound travel and the business to consumer business was discouraging, suggesting what they are calling a tough slog from here. They also say that it could get incrementally worse as time goes on, and that led to them cutting their estimates as well as downgrading the stock.
So at this point now, when we think about Expedia and the big picture, I think the Fed continues to wait on more and more data as they see whether or not they'll lower rates. And folks have been pushing back the rate cuts because there have been bright spots in the economy. But when you hear the companies, look, things aren't as good as they were, but they're not nearly as bad as they can be. I mean, I think we're sort of in this spot, right?
Yeah, I mean, if you look at the kind of the sentiment shared by the president, granted, most administrations would like to see more favorable, more accommodative economic backdrops in terms of monetary policy, to tout better economic performance. I think there's a point to be made, though. I mean, inflation's not really a worry. I mean, we haven't seen inflation be a worry, I would argue, since 2022. And so you look at that, and the one side of the, the risks that they have to keep in balance, or the mandates, as they call them, isn't really a big concern. So then the other question is the economic growth trajectory a concern, or how they would look at it, full employment or stable employment? Well, we are starting to see signs of slowing there. But it's a little bit noisy data given the changes that we're seeing with the immigration backdrop as well as the trade policy. So you understand the sentiment of the Fed, but perhaps as usual, they will be a little bit late to the game with whatever they do going forward.
All right. Great to see you, Alex Coffey. Thank you.